Alright, so let's continue with the entry model that I use for New York session. So in the previous one we discussed possible entries during London Open. Now I want to go over some New York entries just to show you basically how to enter the trade. So you can enter, as I said, on multiple time frames depending on the stop loss you want to use. We'll be focusing mainly on a 50 minute, 5 minute using a bigger stop loss. So Euro USD, as I said, 5 to 10 pips. GU we can do 10, 15, even 20. Gold we're gonna do like 30, 40 pips sometimes. GU has been more clean lately. More clean than Euro. On Euro, if you want to go for a risk reward of 1 to 2 and you basically take a trade with a 20 pip stop loss, it's very hard for Euro USD to move 40 pips. So imagine 40 pips is something like this. Just, it's too much, right? EU only moves like that maybe once per week, a bigger move. Usually doesn't move that much. So it's better to use tighter stops. But let's look at some New York entries. So New York, as I said, is beginning at 4 p.m. UTC plus 3. So that's the time you want to look for. You're going to use, of course, the script session. So you're going to have it marked every single time. But let's go back a few days and watch only New York session. So let's start here, Monday, New York session. What happens here? You see, we just start the day, look at Asia, Frankfurt. Here we had a London Asia low inducement into the imbalance, nice little rejections, the buys towards Asia high. Asia high has been liquidated. Overall bias was bearish, so we were bearish. We should have looked for sells. So let's see what happens with New York Open. So because we are on the 50 minute, we see we have a change of character here. So we're looking for sells. We have the perfect basically confirmation. So we need to wait for retest in the upside area. You can even use the Fibonacci on the lower time frames. Like this, you see how perfect it came right to the 0.7. So I can't really fake this. And let's look at the 5 minutes, see what areas we have. So we had a charge here. We had a huge week with New York Open that basically could have been seen as a liquidity. So if you saw confirmation to go long, then price would probably have went long, but instead it filled the wick, then gave a nice reaction. And here you see a huge wick to the upside. If you want to use the Fibonacci, you can look for entries in this area. Probably I would have taken this wick as an entry because that's the only point that price can retest. And the 1 minute, it's that nice candle there. So you had liquidity being built over here. We had every confirmation. And also when price is coming really aggressive towards your entry, it's a good sign you should enter, because imagine price comes really fast towards your entry point. So price starts flying towards your entry. It's better to market sell, because there's a big chance you're going to catch the high wick, and there's a good chance you're going to have a nice rejection and you can either immediately take profit. I took some trades where I was literally in and out for like 10-15 seconds and I made 15 pips, so 1 to 2. Just because you have a big candle coming into your direction, you take the sell, you leave the stop loss at like 5 pips, then price immediately rejects, you cover the high, and then price goes for the rejection and you just close for profit. So that's what basically happened here. Price came into that entry. And now, because also an important thing that usually happens during New York Open, usually New York opens and goes into a direction. So same thing as here. It creates the high and then it goes to create the low. And after that, after it creates the low, price ranges and it either goes to create a new low or it goes after the high that created. So usually it goes to take out the high or the low that was created at open. So if price opens and creates the high first and then goes down, then most likely price will come back again to take out that high before continuing in the direction that the session started in. So I hope that makes sense. Here exactly what happened. Price started, created a high and then pushed down, then created a new break of structure, and then we had this reversal to take out the high into that area and then short it further. So here, if you look at the 1 minute, you don't really need confirmation because this is a pro trend trade. So you're aligned bearish. I would have just taken the trade here in that area and I would have covered the high. So that's 10 pips. And I will go for 1 to 2, which you can see was hit in 15 minutes. Perfect. That's the trade done for the day. So it's not that hard, guys. Let's move on to next day and see what I think was here. Next day, see what happens with New York. So you don't have a big drop, price is still bearish, created a new low, Asia range. London gives a nice bearish and a continuation. You see the setup that I talked about. You have an impulse down and then you have a retest later in the session. So always when it comes after 1 hour in the session, it's usually a retest and you can safely go short. So here came right back. You see the 50-minute break of structure, pro trend, price came back into the 50-minute area. You can again use the Fibonacci if you want and then look for an entry on the lower time frames. So 5 minutes, we had the whole area there and we had this week as liquidity. see, we could have taken the probably the sell somewhere around here and then cover the high. So another, let's say 11 pips, just to be safe, because you see price is playing around a little bit. I just like to stay in the trade. I don't like watching the charts non-stop, taking a break even here, then entering again, then taking a stop loss because I have a 2 pip stop loss, then entering the third time before price goes into profit. I'd rather just have the impulse, mark the Fibonacci, wait for the area. In this case, didn't really have an area to retest. We didn't have anything on the 5 minute. Let's watch the 1 minute. All right. So on the 1 minute, you see we had this break here and then another breakdown. So we had this area right there. So that's where price came in. So I would rather take the entry there, and stop loss would have been 10 pips. Now, because we had this break, probably I would have went break even, then would have gotten hit at break even. And this is another tip for you guys: when you see a trade like this and then it goes for more than 1-to-1 and it also breaks structure to the downside, you go break even. Then if price comes back again, I'm not gonna enter again without confirmation. So I see price coming back, I will wait for a 1 minute change of character. So price reacts again, creates another change of character here. You see it takes the high, then it takes the low, and then on the retest I will enter again. So here, and then again cover the high. This time it's gonna be like 8 pips, and then target a 1-to-2 or even London low, let's say. And then you see how beautiful price goes to the downside, and it stayed in this area for around 15 minutes. So you had time to enter. You had another break of structure, the downside, another retest, and then price started to go down. Very, very clean, right? So let's see New York session. So London, you had a drop, and then New York comes in. What happens? Price is pretty bearish. We have this Asia low here as liquidity. We're reacting on this Asia low here. So there's a big possibility price will continue and break lower. Let's see what happens here. So New York comes in after a break of structure. I'm not going to look for a sell here because I am at the bottom. So I'm waiting to see the reaction and to see the potential pullback. So let's see what happens. 15 minutes, you don't have an area to pull back. I mean, you have this imbalance. So now we need to watch an area in here, right? So 5 minutes, we have a 5 minute candle here. You see the candle, the flip zone. This is a flip zone because price gave a nice bullish reaction, a nice bullish candle, and then created the break of structure. So that's the only area where price could react. We have the imbalance above, could extend it like this, and then we have the extreme, which is this one. But price usually, when there's a session coming in, volatility comes in, price doesn't really go towards the extreme. It just goes towards the flip zone. So here a lot of wicks up and down, no confirmation for anything. Price starts to go up, and here let's mark the Fibonacci. Also see if it was in our area. You see how perfect that is? So Fibonacci does work sometimes as a confirmation. So you see how perfect it was right inside that 5 minute zone. You see how perfect it tags it. So that's a perfect entry. So in this case, I'll probably just enter again because we created equal lows, liquidity downside, but I would not have a stop loss that big. So if I would enter with the stop loss above the high, let's see tab seen here, I enter, that's like a 20 pip stop loss. No, I'm gonna use a 10 pip stop loss. I don't want to go over 10 pips on you. 10 pips is a good area to cover because you see price went higher. You'll have this imbalance here as a reaction, and then those wicks, and then basically it's going over the high. So that's a good point of invalidation. And then I will target a 1-to-2. Again, very, very clean, right? 1-to-2. Perfect trade, right? And then you have also the option to enter on the 1 minute if you want to wait for confirmation. So 1 minute, let's see if we have a change of character. Price comes in, up, high, and then we take this low that created the high. So this is the low that created that high, gets taken out here. Again, guys, I can teach you basically all the concepts, but you're only gonna really become a good trader when you start noticing patterns. After you have a setup like this, you have the change of character, and price basically ranges a bit into your area. After the change of character, you see how it took it and then started ranging. You should just enter there and cover this high. So go for 8 pip stop loss, or 10. Let's go for 10 to be safe, right? But that's too much. In this case, I would go for 8 because it was confirmed for me. It was a confirmed entry. So it wasn't a risk entry. You have two types of entries. You have a risky entry, and then you have a confirmation entry. The confirmation is when you wait for 1 minute confirmation, and then a risky entry is just when you enter based on the 5 minute. You don't really care what happens on the lower time frames, you just cover the high. Of course, it's better to take confirmed entries, but it all depends on the time you have available to spend on the charts. So here, just enter there, and because there was nothing really to retest, just this area, which didn't really come in. Of course, you can go down on the seconds, so I'm probably gonna make a video about seconds later, but basically on the seconds, you see the change of character here, and then you have a range where you trade from, and then you could basically enter here and only have like a 3 pip stop loss, 2.5, which is pretty insane, right? but I would rather teach you guys how to trade like this because this is the safest and best way to trade. From my experience, I've traded all the ways, and this just doesn't bring a lot of stress into your life. Go for 1 to 2, and then there you go, TP hit, and then you don't really care what happens. You just go do something else. You could have entered again here, but because this is later, it's almost market close, it's not really recommended. Price didn't really come there, but let's see what happens towards the next day. So price builds more liquidity. Below this areas you have equal lows, you have Asia low, Frankfurt gives a push, London comes down, then gives another push. Don't really care what happens here. You see you retest this one there, where you could have taken an entry because it was the extreme zone, so you could have entered because price was coming in very fast, but I wanna go over New York. So that was a good entry, you see. The reason for that happened because this high created this low, a break of structure, because it closed, and then price came, created not equal highs, but created liquidity here with Frankfurt high. You see how perfect it was. London came in, took the low, pushed towards the high into this week, which was the extreme. So I mean, yeah, you could have entered here and have a 10 pip stop loss, target a 1 to 2, and then that was pretty clean. And then you have another break of structure. So now, because on the 4 hour, we had a nice wick here, you see how the candle closed. After this trade, I want to look for a buy. You remember the lesson and trading plan? When do we look for buys? We look for buys after a major break of structure. So we had a break of structure down, and then we have a nice bullish reaction, and then basically want to wait for some buys, but it doesn't get confirmed, right? You see I have a V-shaped recovery, take out the high, then what happens? Have a rejection to the upside, New York comes in, and New York just starts dropping immediately. So when it just starts dropping immediately, yeah, I would look at this. But very important, because it's a counter trend trade. You're just trying to catch a pullback. You're not going to enter like I showed you, just using the Fibonacci and then entering. No, you need to wait for confirmation on the lower time frames, because you really need to know price is pushing. Here New York opened very, very bearish, so you need to see at least a 5-minute confirmation. Even on the 1 minute, nothing happened. You see it just created lows, 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 lows. It never did any confirmation. On the 5 minute, nothing. You see, perfect. Low, high, low, high, low, high. There, this is where volume started to die a little bit. So when you have this, I would look at the extreme for a reaction, just for a quick reaction. So I would look for price to come into the extreme. It's a big chance price is not going to hold that low, but you can look for a potential pullback. So here, what happens? Price gives a 1 minute confirmation. You see how order flow kind of switched bullish, created some liquidity. And then another important thing, when there's a counter trend trade and you want to go against the trend, you want to catch a pullback, always wait for liquidity to be taken, even on the 1 minute, because it always happens, especially on EURUSD. Gives confirmation for buys towards the extreme, and then what happens? 2 huge bearish candles. So after this super bearish candle, I would just enter a buy and then cover the low, maybe do like 6 pips. And then try to go break even as fast as possible and aim for a 1 to 2. So wait for 1 minute, it gives a nice reaction, then price comes back down again very aggressively. It respects the low and starts building to the upside. You see it ranges, it gives some nice opportunities to enter. One very important thing, EURUSD always gives you enough time to get an entry. Always, when price is very aggressively and comes into an area, you're always gonna have time to get an entry, because this is what happens usually. Here it gives time for an entry, but then because it wasn't any liquidity being taken, you see how many traps it made here, but it didn't come into the extreme. It gave a nice confirmation here, people started entering buys here, price started ranging, giving that confirmation, and then slowly pushed up, and then bang, all liquidity and or stop loss is taken. Why? Because you are trading against a counter trend, you're trading against the bearish order flow, you want to catch the pullback, so wait for some type of liquidation. And then here you had enough time to enter, and I think price didn't really give the push. Oh, it did give the push. So even if you miss the initial entry, something that EU does, creates like a V shape, you see, but it doesn't take out the high, creates equal highs, and then has a small pullback where you can enter. So in this case, where will I enter? I'm looking for the flip zone. So where did price start to push? This was the push. Where did it start? It started here, right? So what do we have here? We left an imbalance right at this area. You see the breaker, or whatever it's called, breaker, because here it started pushing higher and took out that high. Have the imbalance. So when price comes back in, you can wait for confirmation. It comes in aggressive, gives a charge, a change of character, then a retest, so you could enter here. And you could cover the low. I would do like 5 pips because it's a counter trend trade, so I would look to get the risk reward in as fast as possible. And then aim for 1 to 2. Let's see if it hits. That's like 10 pips. It's not much. And it does hit, and then I think it drops. Yeah. You see? So you already are over with New York session, so there's no point in staying in trades. But here it came back into the extreme. So another important thing, counter trend trades, it always comes back to a retest. Always. Every time you make a 1 minute change of character, price comes back to retest. After making a 1 minute break of structure, price comes down to retest. After making a 5 minute break of structure or change of character, price comes back to retest. After a 50 minute break of structure or change of character, price comes back down for a retest. So keep in mind, here we came down because we made a 50 minute. See the 50 minute? It had a push, so price came right back down to retest. 5 minute as well, we had a break of structure, price came back into the extreme. So you could enter again as long as it gets respected, but that's the point. You want to get out as quick as possible, secure profits as quick as possible. Price came here, we had liquidity, so it's conformed, going down, comes aggressively, but it's already too late in the session. So I would not take a trade there. And look what happens. Asia session takes out the low again. So you just played that pullback very aggressively on the 1 minute because you want to get the risk reward out as soon as possible. So now we did make the break of structure to the downside. We didn't pull back, but price started to continue down. So I'm still looking for a potential pullback or a continuation. So here, London took out the low, nothing, no confirmation, and then it kind of respected the high. You see how good it was. And then here, what happened? New York came in, created a new break of structure to the downside. I can mark the Fibonacci to look for an intraday entry. 5 minute, I do have the perfect flip zone. You see the perfect 5 minute doji candle, bullish candle before the down move, because price took the high and then ranged and then had the big move down, taking and making that break of structure. That's the flip area where price can return. So you wait. New York opens, creates a new low. You remember what I told you? When New York opens and creates the high and then creates the low, it usually comes back, take out the high again. So guys, it's all about patterns. Once you understand, that's why I said master one pair. I know this type of moves happen every day because I've watched them every single day. So I know when I see something like this, I know what the setup is. So it takes out the high, and then I can play my probabilities because not every trade is gonna play out. I don't have a 100% win rate, but I got a bigger chance of winning just because I know that. So it takes out the high again. It comes into that area because it's very pro trend. I can enter on the reaction and then cover, make a 10 pip stop loss, and then target on 1 to 2, which is the low, which is perfect. And let's see if it gets hit. That would have been, I think, a break even, and then price fails to create a new low. So this is the probability game. If you would have used a smaller stop loss, then that take profit would have been hit. Probably for this trade, I would have used a smaller stop loss because I don't like targeting the lows. I would target this where the imbalance finishes. So I would look to have a stop loss to get a 1 to 2. So that would be something around there, which was good because it covered the high. But if you wait for 1 minute confirmation, that's way better because you have a tighter stop loss. So here you have a reaction, but you have a huge push up. So when you have a huge push up, price can just retrace and then start push to take out the high again. So after taking the high again, I'm looking to see confirmation to go short. Price ranges in this area, so if I see a range like this, I would probably just enter because it's very pro trend. And basically that's New York session done again. So let's see one more day to see what happens. It's not that hard, it's just patterns and times you want to trade in. I think this was news. But anyways, we start to have a pullback here. We're also going towards the end of the month, and you see 1 hour didn't really quite give much. It looked like it wants to pull back. So after this, I need to start watching the higher time frames also. So what's the higher time frame telling me? I have this area here that can be retested because it's the last 4 hour supply zone, and price created a low. It's coming back up. So I will be looking to take sales inside the area. You see here that 4 hour zone also has an Asia high. So I will never take sales close to the Asia high or buys close to the Asia low. No, I'm waiting for that to be taken out because 90% of times it does get taken out. So I'm waiting for it to be taken out because it's also in the 4 hour zone. I will just look to get in as aggressively as possible. So here it wicks above. It's not New York open yet. Wicks, plays around a little bit and then starts dropping and creates this nice push down. So it takes liquidity. I see order flow coming in. So when I see a big move, I can use a Fibonacci because I don't have an area to trade in. I have this 5 minute imbalance that it left, and then if I go down on 1 minute, I have nothing. So I only have this imbalance, which is nice, right? Because price gives an impulse, leaves an imbalance. So price is really pushing down and then slows down. And then I'm looking to take an entry. So where am I looking at? I need to draw the Fibonacci just to give me an idea where I should take sales from. I find an area, which is this imbalance. And then when price comes in, I'm trying to enter, maybe wait for 5 minute close or just wait for 1 minute in this area to slow down and enter, because you can also cover the high. So if you cover the high with 10 pips, then you're all all good. And then aim for 1 to 2, which you see intraday movement, very nice. New York created the high, it's going for the low, and that's the day. So it's not that hard, and it very nicely continued to the downside, creating another break of structure to the downside. So now you can look at the 4 hour and see it also weak the low, so we may see a push bullish now. So let's watch one more day. What happens here? You see Asia high gets taken, then London comes in, immediately drops, takes out Asia low, gives a nice reaction. You wait. We are trading close to the extreme here. We didn't really have a 1 hour confirmation. We just took the low and then created some bullish order flow. So in this case, it's kind of risky to take trades. It's also Monday. So you see New York opens near the low. So I would probably look for either this low to be taken and then looking for a buy inside New York session, or just looking for a small risk buy. But here I don't see anything on the 5 minute. There's not a lot of volume coming in, and yeah, here it's where order flow kind of switched bullish, but was kind of slow. So there was no, I think this was bank holiday also on New York session. So if we go, then yeah, it was bank holiday. So you see next day we have a big drop. Still continuing bearish. London gives a nice reversal, so he takes out the low and then starts reversing because we came in the weekly area. So now after having this confirmation, I think we are ready to look for a potential trade on New York. So you see London did have a nice impulse, and then we're looking at New York to take a trade. So what happens? 4 hour, let's look at 4 hour. 4 hour came into this supply zone because this is what created the low, but this low was weak, so price could be ready for a pullback. So let's see what happens. 15 minutes, we have some rejections there. Can't really use the Fibonacci because I have no intraday area. 5 minutes, let's see New York open. What does New York do? It creates the high, comes back to the low, and then comes to take out the high again. So I'll probably look for a sell here. Why? Because we created the high, then we came to the low, and then we went back after the high again. So I would probably look, because we also made a 5 minute change of character here. This was the flip zone. You see how perfect it was. Why the flip zone? Because here is the change of character to the downside. This is where the moment price flipped. So price took out the high, came down, impulse, New York came in, ranged, came to the flip zone. So I would look here for maybe 1 minute confirmation. So I have 1 week up, 2 weeks up, 2 rejections. After this close, I would probably just enter. So there's no perfect entry. You just need to understand price and when it's ready to flip, and then you enter there. And because this was a riskier trade, I would have probably used the 10 pip stop loss and aim for 1 to 2, which, let's see, very nicely hit. So that's another New York session done. So guys, it's not hard if you put the work in. If you backtest your pair for a couple of weeks, you're gonna understand how the market really moves, and then you just look at those. This is a tip that no mentor teaches. You just need to watch those hours, London Open and New York Open, to look for a trade. And then after you realize there's only one move you can catch each session, then trading really becomes very, very easy. And here, you see, here if you would have kept the entry towards the low because you are still pro trend, like you didn't really take the 4 hour high, just rejected, that would have been a 1 to 6, right? But that didn't happen. So let's see next day, huge impulse down with Asia, then London comes in to take the low, and then you're expecting a pullback. In this case, it's a little bit difficult to catch the pullback because you don't have where to draw the Fibonacci. You have the Asia high, I don't really like using, but it's coming close there, and then you start looking for something in that area. So don't really have anything. You only have liquidity above this Frankfurt high that can be taken, and then you have some more liquidity here, I guess, on the 1 minute, but it's more important to watch the time it comes in. So here is how you could have caught the trade, right? New York opens, what does it do? It has a push up. So it pushes up towards this area. You see Frankfurt high being taken, some liquidity being taken. Price is pretty damn bearish. You could either enter on the 1 minute because it's New York open. So you see the push, and then you just enter here when you see some rejection more aggressively, or you wait for confirmation. What does confirmation look like? 5 minute change of character. You see high being taken, and then this huge drop with a change of character here. 5 minute comes right into the low. You see how it gets respected, and then you want to see the pullback. So now you can try to use the Fibonacci from this high towards this low, the high that created the low. Price comes close to that, look for an entry there. What do you have? You have an imbalance probably. Yeah, so you have the 1 minute imbalance, you mark it, and then you see how perfectly it comes towards the 50% of the imbalance. So you could enter there directly and then cover the imbalance because it's very, very bearish, or you wait for confirmation again, or even the 5 second there. I'm going to show you. So you have the change of character down here. You can use Fibonacci again and then enter here. And here you're going to have a smaller stop loss. can use a pip, and I think it did get hit. Yeah. So there's multiple ways to catch that move. On the 5 second, you have the imbalance on the 5 second as well. I think this was news. Yeah, was news. So 5 second pushes into the imbalance and then starts to die down, and here is the range I'm talking about. So you can either end aggressively here or wait for that change of character in 1 minute, another drop, you go down the 5 second, you find the range, gonna go over it, you find the range, you enter on the retest, and here you can have a 4 pip stop loss and then target the low 1 to 2, and then you're done. So that's it for New York session. New York session is way more clean than London session, but you need to understand how to trade both. I usually, as I told you in the quick trading plan, I usually like to take a quick trade in London and then look for a better trade in New York, and that's about it. So next video I'm gonna show you some entries on the 5 second, and then we're gonna do another video of putting everything together like this was basically, because this is the same thing. I hope you understand. If you don't understand, leave me a message and I will add more videos, but it all comes down to practice. So practice will make you perfect.